The Committee on House Regulatory Reform will now come to order. Madam Clerk, will you please call the roll?
Chair Carter.
Present.
Representatives Liberati.
Here.
Neely.
Here.
Scott.
Present.
Young.
Here.
Grant.
Here.
McFall.
Here.
Snyder.
Here.
Wilson. Mueller. Filler.
Yes.
Wenzel.
Here.
Aragona. Beerline.
Here.
Nyer.
Here.
Mr. Chair, you have 12 members. You have a quorum.
Thank you, Madam Clerk. Representative Snyder moves to adopt the minutes from the March 12, 2024 meeting. Seeing no objections, the minutes are adopted. Today we'll have testimony on 4 bills. We'll start with Senate Bill 702, Senator Singh, cosmetology licensing hours for federal compliance. Senator Singh.
Thank you very much, Mr. Chairman and members of the committee for having us up today. Joining me here to just quickly talk about this bill is Don Romaine, Chief Regulatory Officer at Douglas J. Aveda Companies, and David Dejanay is the president of the Michigan College of Beauty. This is a timely and time-sensitive bill, which is why I appreciate the chair and the committee taking this bill up so quickly. I want to start off by thanking Rep. Neely and her team for all of the work that has been done on this bill. There's a second bill that we want to bring forward at another point in time that we're working with the representative on, and look forward to having this conversation. But the bill that's in front of you today came to my attention because of our friends at Douglas J. Because the U.S. Department of Education was at that point considering expansive administrative rules governing all facets of gainful employment programs throughout the country. Those federal gainful employment rules were adopted on October 31st of 2023, and they now go into effect July 1st of this year. What that means in the space of cosmetology is that our students that are in cosmetology programs today, if we do not line up the hours of education to the federal standards, they will no longer be eligible for federal aid. So what is happening here is a change in the requirements for manicurists and estheticians. And right now, over 80% of our cosmetology students are Pell Grant awardees in Michigan, and then obviously cutting that federal aid would be catastrophic for the enrollment of these programs throughout the state. So we're asking for your consideration so we can meet that July 1st deadline, and obviously the two gentlemen here are here to give some very brief remarks and then answer any more technical questions that you might have.
Thank you and good morning. Don Romaine, Chief Regulatory Officer, Douglas J. Companies. I too wish to thank the committee for having us today, and in particular thank Rep. Neely. Without the support and assistance, I don't think we would be at this point, so thank you. Just in follow-up here, the Federal Department of Education has changed effective July 1st. Some of the eligibility requirements as it relates to clock hour programs for Pell Grant and other Title IV grant funds for students. To try to create a little definition for you around that, or explanation around that, there are 2 rules that run concurrent. One is a minimum 600 hours for a clock hour program to be eligible. The second is the allowance of 150% of whatever a state's minimum hours are. So in this instance, we have programs in the state of Michigan that are at 400 hours, so that 150% allowance bumps them up to the 600 minimum as required for eligibility for Pell and Title IV. They are now changing and eliminating that 150% and making it simply 100% times the state minimums. So all of those clock hour programs that fall below that 600 hour point and drop back to the state minimum of 400 would, July 1st, effectively, those students would no longer be eligible for any access to those funds. Our surrounding states are not in that same position. They have hours that are already compliant with what would be the new federal regulation. So for this industry, what we would do is a couple of things. One, we would eliminate that access to that population that wishes to leverage those funds for their professional education. And we also are at risk of running those students and their future careers out of the state of Michigan.
Hi, my name is David Dejanay. I appreciate the committee for having us here today, and Representative Neely, we appreciate everything you've done, you and your team. We would not be here without you, so thank you so much. What I'd like you to know is this, is so in my school, we've had in the last 30 years over 10,000 graduates. So it's hard to find a salon or a spa in the Oakland-Macomb area that doesn't have one of our stylists as the owner, top stylist, manager. We've been really instrumental in our area for our industry. We used to have a 400-hour manicuring and 600-hour manicuring program. We used to run a 400-hour aesthetics and 600-hour aesthetics program, and we ran those for 10 years. But what happened is we would call the graduates 6 months after they graduated to get their feedback, and we'd call the salon owners that hired our graduates. And what we found is that the 600-hour students were better prepared, had better skills, were better sought after, got jobs faster, and made more money from the get-go. So about 10 years ago, we stopped doing the 400-hour programs and only did the 600-hour programs. As an industry in our state, as school owners, we've been talking about approaching the committee to increase the hours because the environment and the gainful employment training requires it. However, we're here now urgently because of the changes that Don has spoke about with the Department of Education. So there's a couple of reasons why we want to do this. Getting the students prepared for gainful employment, but also to be able to maintain the federal funding. Thank you.
Thank you, gentlemen, for your testimony. Did you have anything else, Senator? Real quick, I noticed you all shouted out Representative Neely. Hats off to you for what you've done in this space, being a cosmetologist yourself. And the other thing is you almost blew it because you didn't mention Wayne County. You mentioned Oakland and Macomb, so you got to work on that. But with that, this would just bring you all into compliance so that they could access federal funds to continue
Correct.
their education. Okay.
Yes.
Seeing no questions, thank you all for your testimony.
Thank you.
Next up, we have Senate Bill. Oh, thank you, Mom. In support of the bill, not wishing to speak, is the Michigan Association of Beauty Professionals. Next up, we have Senate Bill 602 with Senator Hertel, a right to list home sale agreement.
Thank you, Mr. Chair, and committee members. I appreciate you taking up this bill today. And really, this bill is a consumer protection bill meant to stop some predatory practices that we've seen here in Michigan and across the country. And so the legislation would better define engaging in right-to-list agreements and provide guardrails to ensure that a prospective seller has a clearer understanding of the options available if they elect to terminate a right-to-list agreement. The approach would provide consumer protections and crack down on predatory activity that is targeting individuals with the intent of locking them into a long-term listing agreement. And specifically, the bill would limit a contract length to 2 years and allow up to a 6% interest rate annually. There have been horror stories that we've heard from across the state where people have entered into a 20-year or longer contract and incurred liens on their houses, which can lead to a larger cost down the road if a contract isn't known about by loved ones or others when that house goes to the market. So I want to thank you for taking up these bills today, and I would be happy to take any questions if anybody has any.
Seeing no questions, thank you for your testimony, Senator.
Thank you very much.
Oh, raise your hand. All right.
I'm
Hold
sorry.
on, Senator. We have
Thought I
Representative.
was going to get off easy.
I'm Sorry, I wasn't
Bev Rep
quick enough on the draw. I have a very quick question about, is there a reason why, I know that right to list sale agreements are, have a lot to do with brokers, but there are also other people who often reach out to elderly individuals that are not brokers to lock in agreements. Is there a reason why this piece was narrow specifically for brokers, or I just want to make sure I understand in general?
I think it would limit all of the contracts, to my understanding, so that you couldn't have a right to list agreement beyond that 2-year period.
All agreements. Thank you for
But
clarifying.
I think there's some folks from the realtors who could clarify that a little bit as well.
Okay,
Make
thank
sure.
you.
Thank you.
Thank you, Senator.
Appreciate it.
Wishing to speak in support of the bill, we have Stuart Sanders from the Newaygo County Register of Deeds. He is on Zoom. Can you hear us, Mr. Stewart? I'm Sanders.
Yes, I can.
Okay, go ahead.
Very good. Thank you, Mr. Chair. My name is Stuart Sanders, Michigan Association of Register of Deeds, Legislative Co-Chair. I'm speaking today on behalf of our President, Saginaw County Register of Deeds, Katie Kelly, and the entire MARD Association. Again, thank you for taking the time to listen, and we sure appreciate this opportunity. I can say with confidence that the Michigan Association of Registers of Deeds is in full support of this bill. As registers, our sole responsibility is to record documents that meet recording requirements. However, we field many questions and see problems that exist because of predatory practices. Here is one example from Berry County Register of Deeds, Barb Hurlis, and I'll read. An elderly senior citizen had just lost her husband. Realizing she was going to have trouble hanging onto her home, she decided to sell and signed a right to list agreement for a $650 payment. This agreement encumbered the property for 40 years and stipulated that the homeowner will pay a 3% commission upon the sale. If the homeowner wants out, they still owe a 3% commission. She tried to sell the property herself, but the listing company would not agree to sell, as she wanted to sell for less than what they considered market value. As you can imagine, this person was very distraught. This example highlights the very need to make a change to the occupational code, as these types of agreements, once recorded, create a 40-year lien clouding title. The changes proposed for a 2-year agreement with a reasonable cancellation clause will certainly help constituents across Michigan. And I want to thank, again, Senator Hertel for his leadership in getting this legislation moving forward. I appreciate your time.
Seeing no questions, thank you for your testimony.
Thank you.
Next, we have wishing to speak in support, Brad Ward from the Michigan Realtors.
Thank you, Mr. Chair, members of the committees. Thank you to Senator Hertel for sponsoring this important piece of legislation. We are in full support of this bill. One of the important aspects of it, and kind of goes to Representative Grant's question, is this clearly defines what one of these right to list agreements is, rather than the service provision agreement, which would be what you entered into when you decided to list your home, that they are two differently defined separate agreements. Unfortunately, we do have a number of these that currently exist in Michigan that have been recorded. This practice got off the ground very quickly and spread across the United States, and it was a matter of targeting low-income and other vulnerable individuals, promising cash right now for the ability to list your home in the future, and without really proper disclosures or without proper guide rails. And the next thing you know, the homeowner would find themselves with a 20 to 40-year lien on the property, with the only recourse in getting out is buying that lien out for the price of 3% of the home's true cash value. So really, what this does is it make sure that the disclosures are proper and that they are provided at the time of signing an agreement, limits the agreement to 2 years, limits the buyout to 6% per year over what you've paid in. And so by taking away the predatory nature of these agreements, we're hoping to protect Michigan citizens moving forward under this legislation. And we appreciate you bringing this up and look forward to passing this into law. Happy to take questions.
Seeing no questions, thank you for your testimony.
Thank you.
Next, we have not wishing to speak. Neutral is Mac Jones from Laura. Not wishing to speak in support of the bill, we have Matt Sowash from MLC on behalf of Zillow. Next, we'll take up House Bill 5156, which was introduced by Representative, now current Mayor, Lori Stone. Given that she is no longer serving in the House, I'll be giving brief overview, and I will hand it over to the Commission for further testimony and any questions. The committee will go at ease.
The Committee on Regulatory Reform will come back to order. Chair, when you're ready.
Thank you, Mr. Chair. The Unarmed Combat Regulatory Act provides state regulation of professional boxing and mixed martial arts in the state of Michigan. About 10 years ago, several changes were made to the act that removed certain experience and training requirements for boxing and MMA participants, and also shifted some of the responsibility onto event promoters. Some of these changes have caused concerns of fairness and safety. It is time once again to update and modernize this act to meet the current needs of the sport. Representative Stone worked closely with Laura and the Unarmed Combat Commission to identify solutions to these concerns. House Bill 5156 makes the following changes. It requires an individual serving as a second, aka cut person or a corner person, to obtain a license. It requires judges, referees, and seconds to complete concussion management training at the time of license application and renewal. Requires judges, referees, and timekeepers to complete minimum hours of experience at the amateur level before applying for a license. Requiring the Unarmed Combat Commission to assign all personnel to serve for unarmed combat events. And permits Laura to approve third-party sanctioned bodies to help supervise and conduct unarmed combat events in the state. The goal of this legislation is to improve fairness and ensure unbiased events and to promote the health and safety of all participants. These changes will help the sport to continue to grow. I'll pass it over to the Commissioner for more details.
With that, members of the committee, and thank you, Mr. Chair, for considering the bill. I am Don Weatherspoon. I am the chair of the Unarmed Combat Commission. I've served on the commission since 2018. And we are very, very much concerned about improving the state of affairs with regard to unarmed combat in the state of Michigan. We are particularly concerned, as the chairman has already indicated, about having competitive sports without interference in terms of conflict of interest, et cetera, and also for the safety of the fighters. And then most importantly, being on the same level as 49 other states. We stand out as being unique in having a set of rules that are outdated, and we want to modernize, we want to become modernized and come into the mainstream. We really appreciate the work that Laura and members of Representative Stone and other legislators who have worked with us, and we hope that the committee will consider this legislation favorably.
We have a question, Representative Filler.
There were issues with corruption, an untrained corner person that led to a death. And I mean, is there something going on, or is this more, let's just modernize and take some steps?
Primarily modernization. For example, when we talk about safety of fighters, we need to upgrade our concussion protocol, for example, because if we know that a fighter has been injured, we want to make certain that not only are the ringside physicians aware of the new protocol, we want to make sure that the trainers and the fighters themselves are aware of what they must comply with in order to be able to compete again.
And I'll just add real quickly, the one that stands out for me is that the Combat Commission assigned all personnel to serve. Right now, it's really unclear. You can be the promoter and assign referees and other folks. That gives the appearance of favoritism in some ways. So I think having the commission assign it will remove any of those appearances of favoritism or impropriety.
No further questions. Thank you.
Thank you.
The committee will go at ease.
The committee will now come back in order. We now have House Bill 5460, Representative Farhat, motor vehicle installment sales contracts. Representative, whenever you're ready.
Thank you, Chairman Carter, and members of the House Regulatory Reform Committee for having me today and allowing us to discuss House Bill 5460, a bill that would allow for the usage of what 42 other states do in allowing motor vehicles, new motor vehicles to be financed under a different manner. Currently in the state of Michigan, we require all payments to be done equally. We don't allow for lower payments up front or a discount to be applied in the first 30 months or the last 30 months. That is what other states allow for financing to happen in the motor vehicle code. In Michigan, we don't allow that. It's an older statute that was written years ago. And the hope here today is to begin the conversation on how we can expand accessibility to vehicle ownership, how we can begin the conversation on making sure that we're making it affordable to buy a vehicle, and also modernizing our state statute to remain competitive with the other 40 some odd states that do this. I want to welcome as well up here, if it's okay, Chair, I believe Diffs is here as well to talk about some of the work we've done on the drafting of this legislation. I want to let members know there is a substitute that we worked on very extensively with Diffs that may or may not be in front of you, I'm not sure, but it's not in front of you. So, but I want to talk to the substitute and the changes we've made. And it's not a final substitute because we're still working it, but I want to speak to that. Is Diffs here? Yeah, please. And I will note for the record, Chairman Carter, because I see Chairman Snyder or Representative Snyder here, I was on time for this testimony today.
Well, in this committee, we wear ties. Well, go ahead, sir.
Thank you, Chair Carter and members of the committee. My name is Ross Yednock. I am the Financial Services Legislative Liaison at the Department of Insurance and Financial Services. DIFS regulates financial services and insurance industries in Michigan, including state-chartered banks and credit unions and other consumer financial services, like entities licensed under the Michigan or the Motor Vehicle Sales Finance Act. The mission of DIFS is to ensure that all consumers have access to safe and secure insurance and financial services, and that they are provided by entities that treat them fairly. Currently, as the representative mentioned, auto sales in Michigan must be of the same or pretty much the same amount over the term of the loan. This bill amends that, and we've been working with the representative to make sure there are appropriate consumer protections in this bill. The four ones are that we've been working on that will be in the substitute are the disclosure that payments are not of equal amount, being that this has been the case for 50, 60, 70 years. We want to make sure consumers understand that. That this only applies to new vehicles. The current bill, there's some ambiguity in that, so the draft will make sure what we don't want is this to be on the used market. Cap the difference between the two payment levels, because you can start out with a lower one and it can be a higher one, so we're looking at a cap on that, and that consumers must qualify for the higher amount of that loan. Again, I'd like to thank Representative Farhat for working with DIFS to get to where we are, and look forward to being here again very soon.
Yeah. And Chair, if I may, before we move on, I want to give an example for folks to kind of maybe see what the impact of unequal payments is versus equal payments. Let's say you're trying to finance a $40,000 vehicle. You can finance it for, let's say, 72 months. Your payment over the course of 72 months, under the traditional circumstances we have now, would be $605.96. Under the proposed, what we have in front of us, it would allow financers to bake in a discount or a decrease. So, for example, under this flex buy model, you'd be able to, same vehicle price at $40,000, same interest rate, but your first 36 months, and this is at an 18% decrease, your first 36 months would be $496.89, right, compared to the $605. So you're able to realize a savings on the front end. Now the next 39 months, you would pay $671, right? But I want to make this very important. Another protection we put in here is if a consumer decides to sell it at any point or to pay it off early, there's no penalty for that. So if they sell off the bank note, they don't have to worry about a penalty there or an additional fee. The whole point is to allow folks to get in at an affordable rate, and it's important to say they still have to qualify to be able to afford the $671, right? So they still have to qualify for the $671 price payment, but they're able to opt in for that discount just so they can plan easier, or if they just want to forego the payment in the long run. So I just wanted to make that example for members of the committee to understand.
You know, I appreciate that example because I was looking at it as a some type of balloon payment further down, that if a person has circumstances, they may not be able to do it, but if they can sell it, it still is the same ending price.
Yes.
Okay.
So at
All
no
right.
point does the principal change of the price, only the payments for the vehicle change.
Okay. Do we have any questions? I know I have. Oh, hands up. All right.
Chair, if it's okay, may I invite Kurt Berryman from the Auto Dealers also sit up here?
Sure.
Questions in case there's relevance.
Sure.
Oh, we got a tie. Oh, wow. Man.
Not going to make the chairman mad. right off the bat.
Did you want to add anything or testify, and then we'll get to questions?
Yeah, you know, Mr. Chairman, thank you for taking this up. I want to thank Representative Farhat for doing a great job on this, and DIFS. I'd really like to give DIFS staff credit for, this was a good bill, I think. It was brought to our attention, my dealer's attention, Ford dealers' attention by, much like you, attending a national conference with other Ford dealers where these other 42 states are participating in this financing option. You know, why do people pick a financing option? I don't know, but I think this is a good option that you're giving folks to choose from. But I think diffs, the bill that was introduced, certainly the things that were laid out, a number of belt and suspenders that give great consumer protections, the 40% cap on the difference between the payments, I think that's great. Limiting to new vehicles is great. The one thing I think we're still working on is this definition of marginal rate of what a person can be financed. So we're really close. So I'll be happy to answer any questions. Unfortunately, I can't give you any great anecdotes because it's not allowed in Michigan right now.
Thank you, and thank you for dressing up for the occasion. Representative McFall.
Thank you, Chair. I'm just curious as to, do we have any sort of data that shows, like, in other states where they have this, like, repossession rates or anything like that? I know you mentioned that it can be sold, which is probably easier than selling a house. You know, I shouldn't say probably, it is easier than selling a house, but I'm just curious if there's any sort of data that shows repossession rates on this type of loan.
Yeah, I'm sure we can find that data for you. I think Ford is here as well. I don't. They may have the answer to that based on they do this in other states, in 42 other states. But I think, you know, again, unlike a traditional where it's fixed payments, you're able to have that discount up front, right? You're able to have, or the back end even. And so I think that gives you a little bit more flexibility in financial planning, right? But I can get that data for you, I'm sure. Yeah, and we'll forward it to the chair's office.
Thank you. Representative Young, did you have a question?
Yes.
Okay, thank you.
Thank you, Mr. Chair. Thank you all for being here today. This is exciting legislation because I want to really understand it. Now, I want to pick up with the last thing you just said, Representative, because that's going to be important for me. You said the front end savings, and then you said even on the back end for that matter. Mm-hmm. So are you saying that one of the options is you can pay more on the front end and pay less on the back end? Because I didn't see that, and I apologize for missing that.
So in the legislation as it's written, it does not mandate that the discount has to be at the front end or on the back end, right? It doesn't say, for example, for example, that you can choose to pay $671 for the first 36 months, then you could pay $496 for the last 36. You could do that, right? The legislation doesn't mandate or prescribe you to do it one way or the other, right? That's how it's written.
Representative, it allows unequal payments. So it doesn't
Right.
it doesn't matter if the larger or at the beginning or the end. It's
Okay, so
wide,
that-
wide open to the scheduling of the payments, with the caveat of the caps and on new cars.
So look, if you-
And no additional principal. The amount
Right,
of the loan
it- the
can't be raised.
principal shouldn't change,
And
right.
the interest rate cannot change
Neither of them.
Okay,
during that
all right.
time.
So that's good. So I think we need to do some work around making certain people understand, because I was just having a problem wrapping around my head that I'm going to be paying more for a vehicle that's less way down the road. I was just like, I don't like the way that sounds. It was one thing to go into the agreement knowing that I knew I was going to pay these set amounts, but now I'm looking at one example on a $30,000 loan. First 36 months is about $504, but the next 30 months is like $611 for a car that costs a lot less. So I was just trying to understand, maybe I'm the person that wants to pay $611 on the front end so that down the road, even when my car's costing less, I'm paying less. So I wanted to see if that was something that, was covered in the bill. And then last thing, I was just looking at some documentation before me. I just want to read it real quick. It says, if the larger payment is more than twice as large as the average of the series of earlier scheduled payments, then the buyer has the right to an option to either pay the larger payment or enter into a second contract agreement that complies with the act. So then that's really concerning for me, because now this car is costing more and more money, and I'm just trying to figure out how could it ever equal double the amount to begin with, and then the consumer now may have to enter into yet a second agreement to pay for this car that's getting older and older and older. It's already 5 years old. So I'm just trying to understand that.
And
Thank you.
I think in the substitute that I had before me, I want to try and find it in the substitute we have before me. Apologies, I don't have
No.
as enrolled the version. I think that was something we worked through with
Okay.
diffs. You recall this section when we were doing the amendments?
No, I've got the
substitute?
I do not have the substitute.
Okay.
When you find it,
I will send it, yeah.
send it to me and send it to the rest of the members if they care to know.
Yeah.
But that's important I need to understand how it could potentially double. And then there's a second contract in order for you to be able to continue to afford the car that you went to a contract with, 5 years earlier
Because what we did, one of the things we did,
or
Representative.
3 years earlier.
Young, if I may, one of the things we did is that we said that these types of agreements, that there's two things, right? This is, and again, I'll make sure you get the substitute. But is that one, the amount of any payment under the installment sale does not increase more than 40% from the first scheduled payment. So that means that caps your discount rate, right? That means you have a discount rate of, a certain percent, and so it can't exceed 40%. So I can't hypothetically, say, Representative Young, or I'll get you in today on this car for $100 a month, and then 30 months from now, it caps up to $1,000, right? That clause right there prevents that scenario from happening. The second thing we said too is that the amount of each payment under the installment contract does not exceed the buyer's maximum payment threshold, right? And that's determined by the seller or the sales finance company. So it's like you're using your DTI, things like that, to make sure you can qualify for the vehicle. But I will look into that specific section you mentioned.
And was at the end there.
Oh, it's at page 7.
Of the original.
Oh, that's on the original.
It's out of the sub.
Yeah, it's not, that is not in the
It's
sub.
out of the sub.
Perfect, yeah, it's not in the sub. Yeah, no, that's not in the substitute. So that addresses the question then. Yeah.
So essentially, this is an option for a person buying a car.
Yes.
And they could do it two ways. If they know, say, I want to get the car now and I'm working, but I know in 3 years I'll retire, I'll load up the front end and pay more now, knowing that my income is going to go down. And we understand car depreciation, but it gives options so that you will know where you are, and you can determine that. Or you can just go with the straight 72 months, same payment.
Absolutely.
Okay, thank you.
And in no time during the term will the principal change.
Thank you, Representative. Thank you, gentlemen. Next, wishing to speak in support of the bill, we have Rob Moselle from Ford Motor Company.
Thank you, Chair Carter and members of the committee, for the opportunity to provide testimony today regarding House Bill 5460. Excuse me. I'm Rob Mussel, and I'm counsel for Ford Motor Credit Company, which is the financing entity of Ford Motor Company, and we support this bill. I'm responsible for the legal team that supports Ford Credit in North America, so I see how differences in state law affect consumers every day. And House Bill 5460 will help address one of those areas for Michigan. Ford Credit provides a flexible financing product called FlexBuy for customers purchasing new vehicles, and we provide that product in 42 states. Unfortunately, Michigan is one of the 8 outlier states. FlexBuy allows customers to make a lower payment for the first 36 months of their contract term, and then a higher payment for the remaining months. Because the Michigan Motor Vehicle Sales Finance Act presently prohibits payments in unequal amounts, Ford Credit cannot offer FlexBuy to Michigan consumers. In other states, we have seen that consumers appreciate a reduced payment during the initial period of the contract to meet their financial goals. As vehicle prices have increased, payment affordability is increasingly a concern for consumers. For example, a recent college grad may want a new vehicle with current technology and safety features. The lower initial payment of a FlexBuy contract during the first 36 months may allow them to purchase that vehicle based on their current income, and as their income increases over time, they can afford the higher payment. We also often see customers choose to trade in their vehicle when the payment increases, allowing them to purchase another vehicle. Today, the law prohibits dealers and customers from using different payment amounts to finance a vehicle. House Bill 5460 simply removes that prohibition while putting guardrails in place to ensure consumers are aware of their payment obligations for the entire term of their contract and that they're not required to pay additional fees. Our data analytics team tracks the performance of Ford Credit's FlexBuy customers and compares that to customers with standard amortizing contracts with similar terms. We see very similar performance between customers in standard amortizing contracts and Ford Credit's FlexBuy contracts across the 42 states that do allow for this type of flexible financing. This bill levels the playing field for Michigan consumers and grants Michigan consumers the freedom to determine the payment amounts that meet their financing needs. Thank you, Chair, and for the opportunity to submit this testimony, and I'm happy to answer any questions.
Thank you. We have a couple members with questions. Rep. Grant, Young, which one? Which one you want? Rep. Grant.
Thank you. I just have a few quick clarifying questions to make sure I understand. Once, say this becomes available in Michigan, is it available to everyone that is purchasing a new vehicle, or is it up to the dealer's discretion who they will offer this incentive to? Is there anything other than buying a new vehicle that you must have to meet qualifications for this option?
Yeah, that's a very good question, and you couched it exactly right. It's the dealer and the customer that enter into that initial financing contract. The product that Ford Credit offers today in the other 42 states allows those the first 36 payments to be lower than the remaining payments. And that is underwritten by Ford Credit, so the dealer and the customer enter into that initial transaction, and then Ford Credit evaluates that transaction to make sure underwrites or evaluates to make sure that it's a transaction that we can purchase and that we have an expectation the customer will be able to meet their obligations under.
So they, in addition to that DTI, they probably need to show some form of credit worthiness and other things to qualify for this offer?
Absolutely. It's similar to the way that we purchase contracts from dealers for a standard amortizing product. It's those same sets of requirements are in place and the same underwriting guidelines.
Thank you. And then I have one more quick question, because I know we've been talking about payment affordability for people. Is there any state that offers this for leasing products as well on new vehicles?
Yeah, that's a good question too. So leasing is governed by federal law and then state law. So Ford Credit does not have a product that would allow a different price for leasing. The lease term is established and the capitalized cost amount is then divided by that lease term to set an equal payment for the period of the lease. And then at the end of the lease, the customer is able to turn that vehicle back in. Yes.
Representative Young.
Thank you, Mr. Chair. Thank you. I want to piggyback on your example of the college student. And I heard you say that based on current income, the qualification. And so based on current income qualification for the second half, if you're looking at it for the last 30 months or the first 30 months, I wanted to be clear about that because I thought I had it. And then you said something about current income. So then I was like, oh man, you done messed me up. So would you please explain that for me?
Yeah, thank you, Representative Young. That again, great question. The way that the Ford Credit Program, the FlexBuy program works is we evaluate that customer and make a determination, an underwriting determination of their ability to pay. Under the proposed Michigan bill, as we've been working through various iterations, one of the guardrails that Michigan has recommended, that DIFS has recommended, is to place a requirement that the underwriting occur on that second higher payment rather than on that first payment. So that's something that's different. We don't have that requirement in any other state, but it's a requirement that we believe we can work within to provide that protection for Michigan.
Yeah, that's a good safeguard. Just one more. And so every person that's come up here continues to only talk about the savings on the front end, but are you okay with flipping it like our chair talked about, somebody who's retired who wants to pay it up on the front end because they know their income is going to be less on the second end? Do you have any concerns about flipping how we do the flex payments?
So let me try to answer that and then make sure that I'm being responsive to your question. Thinking about could enter into a standard amortizing contract and pay more up front and pay that vehicle off early, or pay the amount that's required and pay it off in the normal time. So there's no penalty for paying early. Customers always have that option. FlexBuy doesn't change that option. Customers can always pay more. What our FlexBuy product provides is a payment schedule with a lower payment up front that often allows the customer to maybe get into a vehicle that has the safety features that they want or has that new technology that they want sooner than maybe they would otherwise be able to. Sure.
So on that graduate salary, I can get that Mustang electric car, huh? With the hopes that my income is going to go up.
Well, as this bill is currently drafted, you need to qualify for that higher second payment in order to be able to get that
Great point.
that Mach-E Mustang,
Great
which
point.
is a beautiful vehicle and one that we would love to see you driving around.
Thank you so much for your testimony today. Before we close, we did have a card in support of House Bill 5156 from Mac Jones from Laura in support of the unarmed combat bill. With there being no further business before the House Regulatory Reform, we stand adjourned.